It's irrelevant how much you know. Like you have to really grasp, how can I use this in my daily life? So what I want to urge from all of you is during these morning sessions, yeah, we're always making money. Yeah, we're always winning these trades, but I want you guys to really ask yourself, why did we take this trade? Every single time you take a trade, you should have a very clear understanding of the reason you took it, the risk associated, maybe even like not even maybe, but the confirmation signs that you used, meaning the criteria to execute the trade. Why do we want to be deliberate like this? Because if you want to recreate your trading results, you can't have consistent profits with inconsistent strategies. So if you don't identify the things that are working for you to be able to do those every day, you're going to have up and down results. So whenever we're on these streams and we catch a trade, take a second after, maybe at the end of the day, once the market's closed, and ask yourself, why exactly did I take this trade? And the answer is not, oh, because Roy took it. No, no. What were the criteria and what were the confirmations? Now, once you start to identify those, it's not, like most traders struggle because they're trying to use their intuition or they're trying to use their own discretion, meaning case by case decision making to make decisions about their trading account. What I would urge everyone to do is, if you want consistent results, is to use a mechanical strategy, meaning that there are a clearly outlined set of rules that if you follow these, you're going to make money over time. So what is your mechanical strategy? Are you trading mechanically or discretionary? Do you actually understand why you're entering these trades? And if the answer is yes, now you're getting on the path to profitability. That's the first step. Handling emotions, psychology, holding trades, closing trades on time. These are smaller issues that get worked out. But if you can't identify the reason you took the trade, that's where you end up creating a ton of errors where you get in a random trade. You can't really explain to yourself why you got in. The moment that you're in drawdown, you don't have a clearly defined reason for why you entered. And so the conviction isn't there to stay in the trade when trouble shows up. And then as soon as you're in drawdown, you close it because you don't even know why you got in the first place. You guys get where I'm going with this? So before I start my trading day, I have a list of I don't want to say affirmations, but they're more of reminders of what makes me a profitable trader based on my history with myself. What makes me a profitable trader is following a clearly defined plan. So I have this in the sticky notes. I am a profitable trader because, right? This is not one of those cross your fingers, stare in the mirror, and hope that things work out. This is, I am a consistently profitable trader because I have a clearly defined edge. I understand why I'm taking my trades. I understand and accept the risk on every single trade. And my objective is long-term management, not short-term gratification. Those are issues that I personally deal with. Short-term gratification, which is wanting to catch the best entry, wanting to go bigger and get a bigger return right now. Those are things that have held me back in the past. So when I start my trading day, I don't get on here like, okay, I got to find the best entry. I got to find the best entry, which is where most traders' mindset is. My mindset is, what do I need to do today to make sure, number one, I don't blow the account, and number two, I can make some progress forward. My list is specific to me. Don't overtrade, don't over leverage, clearly define your risk and clearly define your edge so that way you have confidence, and then follow my plan and follow my rules. I have 10 rules for trading NAS that I cannot break. So my priorities now are not to make money, which is where most people struggle. My priority now is to follow a clearly defined plan. That, if I do it every day, will lead to profitability. So follow the process, the money will come. Have a great system and follow that system, the money will come. Put a one in the chat if that makes sense, and let's get ready for a great trading day. Josh says, Roy, I'm in shorts. AMG, good morning, Robin, Jaleesa, Cliff, Biggie Smalls, great to see you guys. And of course, the Chart Addicts members, we have over 30 people here on the Zoom call this morning. Kevin, Walter, Tanisha, T, my guy T, great to see you here this morning. Sandra, Sam, Roman, P. Who's P? Noah, Mike, Max, Lessman, Ken, Jamil, Jeffner, Janae, James, Jacques. There we go. We got Big Gabe, we got Frank, we got David, we got Chris, we got Chris Breezy, We got Castro, Pips, Bobby, Bianca, two-step, and of course, the man, the myth, the legend, Big Bryce. Good morning, everybody. He says push and pee. We're pushing peace today. Yeah, I saw you. I put up a tweet, I think 2 days ago. Very straightforward. It was a set of 6 principles or 6 steps to successful trading. The first one is have a clearly defined edge. Define your edge. So let's do this from top to bottom. Clearly defining my edge says, where am I looking to enter the trade? What does my strategy tell me about the market opportunity? Had I been awake overnight, this would have been the perfect entry, but now I'm waiting to see if we get a double bottom correction. So my edge says, I look at markets in terms of discounts and premiums. I look at markets in terms of buying with the trend. Josh, we'll talk in just a second. Give me a sec. Okay, so my strategy is very simple. Number one, identify the trend. Which way is the market going? Right now, we're bullish on almost all time frames. Almost every single time frame is bullish, except for maybe the 1 hour. Even the 1 hour is bullish because we're still creating higher floors. So we'll just say all time frames are now bullish. Two is I want to identify key areas of structure. So in a bullish market, you buy at support. So what I want to do is I want to identify support levels that are potential for the market to reject, including down here and right here. So the two things are, number one, identify the direction. So we're bullish. Why? The whole purpose of technical analysis, number one, is to identify the direction of the trend. Because if in a bullish market, you want to buy, in a bearish market, you want to sell. So right now we identified it's a bullish market, so I want to buy it. Even though everyone's telling me, Roy, we should sell, the market's going to turn around. Da, 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 da. Okay, number two is structure. We have identified the key level right here at 17,350. And of course, this is the same level that we have been anticipating all week, 17,350. Finally hit. And now we're looking for the double bottom rejection. Number three is where's the best entry? Best entry for me would be $17,380. Okay, so identify your edge, identify the potential entry, get the key zone. Now, here's the most important step that I think people neglect. Identify the exact risk and reward on your trade. And then last but not least, well, not last, but accept the risk on the trade. Knowing how much you're risking and accepting how much you're risking are actually two different games. Most people don't do either. Knowing how much you're risking says, if I use a 1.0 lot size with an 80-point stop, how much am I risking? Now, depending on the broker that you're using, this could be $80, this could be $800, or if you're using like one of the high margin, like the 1 to 500 leverage brokers, then this could even be $8,000. All right, because let's say like Hugo and KOT and some of these folks, they're using 0.01 as the smallest possible lot size. And so when you go 0.1, then you get to the 800. And then when you get to 1.0 lot size, you get to the 8,000. So you have to know how much are you risking on your account. Once you've identified that, let's say 1.0 is $800 on FTMO. Then you have to ask yourself, am I okay with losing $800 right now? Well, this will actually be 10 lots, but am I okay with losing $800 on this trade? Is this trade attractive enough? Does it meet so many confirmations that it's worth me losing $800? I'll be completely honest with you guys. Unless we reject this zone, my answer is no. Personally, I would not risk the $800 on this trade. If we get that rejection, then my answer shifts to yes. So, number one, we identified the edge. For me, that's direction, structure, and location. and candlestick pattern. Number two is I identified the risk on this trade, which is risk and reward is 2.66. So meaning for every dollar I risk, I'm going to make back $2.66. For every $100 I risk, I'm making back 260. For every 1,000 I risk, I'm making back 2,600. Now I know exactly what I'm expecting. If I'm risking 800, to figure out how much I'm going to make is this times 2.6. I'm making 2.6 times my risk, which is going to be about 1,600. Let's just call it 2,000 or something like that. 2,100 or something. I'm pretty sure that's close. So if I risk $800 to make 2,100, now I'm going to ask myself, does that sound worth it? The answer is yes. Risk and reward makes sense. Overall risk makes sense. Do I accept the risk? That's the last piece. The only thing that comes after identifying your edge, identifying the risk, and accepting the risk is execution, trade management, rinse, repeat, review. Again, identify your edge, identify the risk, accept the risk, execute without hesitation, trade management, rinse, review, repeat. Cool. Any questions? Put a one in the chat if this was helpful. And yeah, let me know you guys' thoughts about having a clearly defined edge or a clearly defined strategy so that you can recreate the results, have consistent results as opposed to, doing something different every day. Josh Allen said, I placed my fib perfectly thanks to the masterclass. I love to see it. What he's talking about is probably this. Bro, look at that 88.6 rejection right here. And so here's the thing. For my masterclass folks, you guys are about to get the inside joke. All right, so pay attention to this, Josh. When I sent out my markup and I have this target already marked off, where do you think this target came from? The 17,350. To the untrained eye, it just looks like a random price. People could just be like, oh, it's support or whatever they could say. But a lot of people will ask me, Roy, it should be lower, right? Because it's not really on the body of these candles. It kind of looks like a random price. Once you guys understand the strategy itself and you can look at the ins and outs, you'll understand exactly why that zone was chosen. And that's where you can start to find those perfect rejections on the higher time frame. Isn't that crazy? All right. Looking at the daily candle, it rejected from daily support already. Can it move upwards from this current point? First off, the markets can do anything. Always remember that. Can the markets keep going? Yes. Can the markets crash for a trillion pips? Yes. Now, this individual does make a great point, Zane, which is if the market's going to go bullish, first thing what it's going to do is it's going to establish a lower range and a higher range. So it'll establish a bullish range, come back into retest liquidity, and then close back bullish. We're still creating higher highs and higher lows. However, I want you to notice one thing. Notice strong price action versus weak price action. So when the market is aggressive, what you'll typically see is these very strong and aggressive bullish candles all in one direction with no break in between. When the market is about to go in for a correction, you'll start to see the volume of the candlestick start to get lower and lower, even start the introduction of some bearish selling pressure. And then it just starts to get weaker and weaker until you have a much needed correction. Then you have aggressive, slow down in volume for the market to pick up liquidity, and then continuation. Aggressive, slow down in volume for the market to collect liquidity. Now, there's two things that can happen here, which is we have a break right here of the neckline, and then over here, there's no traffic. So if we stay above this zone, then yeah, we're going to continue to the upside. If we break below, there's a good chance that we could fill a good part of this area before we continue bullish. So we're already in a bullish market. The market is still creating higher highs and higher lows. So right now we just trade with the trend unless the market breaks the zone. If it breaks the zone, then we can look for lower levels like right here. But until then, the trend is my friend until it ends. Kill. All right, let's take a look at these. By the way, the US 30 trade from yesterday was an absolute smash. Absolute smash, still running. Ended up hitting close to 1.8 to 1, 230 points on the US 30 trade from yesterday. Let's go through NAS100 coming down to entry. By the way, guys, I do want to make something very, very, very clear. I'm trading structure because the trend is your friend until it ends. The trend is your friend until it ends. But a big part of my own trading is discretionary. I would say that 90% of my strategy, of my execution, is mechanical, based on a clearly defined set of predetermined rules. 10% of my trading is discretionary, meaning the decision to stay out today, the decision to not get in, the decision to this gut feeling of, I think it's going to break. I try not to rely on the intuition too much, but after a certain amount of years, you got to trust what your body is telling you because your intuition is a direct reflection of your memory and your experience. Your body has internalized the experiences that you've had and is trying to tell you, hey, buddy, we've seen this before. So being in touch with your intuition, having not a lot of noise and clear, really just some peace so that you can tap into the intuition, that's when it's the most accurate, or that's when it's the most helpful. When you're clouded, when you don't really have a direction, when things are just very distracting, you can't really tap into intuition because you're not really listening to your intuition. It's more of like things you just heard. There is a big difference. So my discretion, my intuition is telling me sellers could try and pull down for one big sell here, only because this head and shoulders with a double top and the market unable to break the right shoulder area, this has historically been very bearish, where we end up breaking the lows and coming in for a deep retracement. I don't want to say I've seen this before because every market pattern is unique. However, markets might not be the exact same, but they do rhyme. And this looks like a very bearish pattern that I've seen many times before, where early buyers who have been buying for weeks on weeks on weeks get trapped in a consolidation or get trapped in a pullback and end up giving back their money. Why do I say all that? Because I'm still taking this buy. But with that being said, I want you guys to understand the probability of us breaking is very high today. This is not like all the other trades that we were taking where the market is so aggressive, it's going to tap and release. This is going to give us some trouble. So if you're already up for the week, consider not trading today. If you're in a challenge and you're very close to whatever, this is not those high probability trades I keep telling you to wait for. This is right. We're very late trend. The market has already shown us a rejection pattern, and right now it's more of a wait and see. I hope that makes sense. Put a 1 in the chat if that makes sense. When we pay for the masterclass for February, should we get an email with a Zoom link, or is it just those tickets with a QR code? You should get an email with the Zoom link as well. That's how you can that's how you can access the masterclass directly. If you don't have it, I would consider checking the spam folder. That's what it is. Might have ended up in spam. All right, I'm about to go through gold here in a second for my gold folks. Beautiful. Josh, when you say that you're tired of not seeing progress, tell me a little bit about your story. And by the way, a big part of what we do at Chart Addicts is personal coaching. I've been personal coaching for years. Our team is absolutely incredible. And I want to show you guys a little something, something. People think that doing one session or 3 sessions with me is not going to help them because one session can't possibly be enough to provide some life-changing results. Well, let me show you. Let me see if we can provide Josh some life-changing results right here, right now. Josh, give me a little bit more context about why you believe that you're not seeing progress with your trading. Because I see you here pretty often. I know you're paying attention. I know that you are hungry for this. So tell me exactly what's happening in your trading. While you do that, I'll cover gold here. How many NASDAQ Masterclass in the year? Well, we're only doing one this year. If you guys want to learn this strategy, this is going to be the last generation or the last class that has access. So February is going to be the final one. If we do a masterclass in March, because we're doing a world tour, so I will be teaching stuff on the world tour, but we're not going to be doing a formal 4-day class where it's start to bottom with a curriculum. So if you want, and the beauty of a course, by the way, guys, is there are 100 concepts relating, or like let's just say 1,000 concepts relating to trading a proper strategy, and they're all over the place. With a clearly defined curriculum, what you do is you take the most important of those concepts and they rise to the top, and then you learn those concepts in order of a foundation, context, and then application. So again, foundation, context, application. So it's not just a bunch of different concepts. You take concepts in order to build a system. And so that's why a curriculum will save you thousands and thousands of hours, years, thousands of dollars, just by not having to go out there and learn all these different concepts and then try to put them together yourself. Robin said, I took the masterclass, but I'm having a hard time understanding the model on entries. Well, Robin, what I would suggest is if you go to the review sessions that we did at the end of the year, if you go to the members tab and you go to the recording section, there's a tab here called NAS100 with the review sessions that we did. These, I think, are some of the most helpful. These are some of the most helpful. Let me sign in real quick and actually show you another resource that is available to all traders. To all traders. I mean, all Chart Addicts members, not all traders. Simone, I appreciate the question. Head over to the link in the description, or you can go straight to chartaddictsfx.com and go to live classes to learn more about the masterclass and how to learn this strategy for yourself. But I'm trying to find something here. I believe if you go under the coaching tab and go to recordings, I have some of my favorite videos down here. This is from a course that I put up for coaching students, but it's available to a lot of you guys too. There's a video here on risk management that I would recommend watching, but there's a video on sniper execution. This is basically taking the strategy, going one step further and really, really looking at quick entries and what that even means. It's an hour and 15 minutes to describe the sniper entries. Highly recommend it. There's also a video here on trading mindset. There's optimizing your trading system, which means once you've built it, is it just done and you're done? No, you're going to have to go back and make sure the strategy is keeping up with the market conditions. Day 8, managing capital, how to grow capital, how to maintain capital, exposing the markets. This is basically just me putting it all together and just showing you exactly how the markets work from start to finish. So head over to the members, coaching, and then the recordings, and you'll have access to this incredible info. But also you can go to recordings and just look at the review sessions that are specific to the masterclass. These are 1 hour, an hour 30, another hour, just to really go through and look at my strategy from start to finish, including session times, including the indicator. And I'm pretty sure I go through the Forex, or I go through the simulator. Oh, wait. I go through the simulator to be able to go through and show the strategy in real time. All right, I'm back. All right, so we covered prime entries. We covered market structure. We covered trending markets versus consolidating markets. We covered higher time frame execution. I even went through USD JPY and showed you how the strategy would work with Forex pairs as well. All right. Okay. Yeah, I recommend checking that out. Just went through a little bit too much of that. Good stuff. Okay, so Josh said, I never stick to or have a good trading plan or discipline risk management. Josh, have you taken the class or have you done any formal education or any training at all to really have a clearly defined strategy? Simone, of course, I appreciate the question. Of course, Robin, appreciate that too. Chris said, how do I get these courses are so good? Well, they're unbelievable. Those reviews really do help. Yeah, they do. James says day nine. Day nine is crazy. Only the real ones know. Body to wick, baby. Body to wick. All right, pretty sure. Okay. Biggie Small says caught that 886 yesterday on US 30 thanks to your method around 1 p.m. Yeah, we caught that. Yesterday was nice. All right, let's go through the horn real quick, or go around the horn. Go through the different pairs. How to use the Fibonacci tool. Can you elaborate? I can go through the basics at the end of the stream, but I just highly recommend that you guys don't go through these different concepts one by one. Like you can go back to the individual concepts and then go into more detail, but I would highly recommend you guys just learn a coherent strategy from start to finish. So you can use the tool, you can use price action, everything together. When people don't understand how to use a tool and start trying to use it, they start to conflict with the information they already know. They throw out some of the stuff that they already know, and they become too reliant on the new tool that they just learned. What I recommend is learn a strategy from top to bottom instead of, being like, well, I don't really know how to use the Fibonacci tool. It's like if you knew about the strategy or about price action in general, like from impulses to corrections, if you knew that stuff, the Fibonacci tool is so easy to use, it's unbelievable. Most people don't know how to identify an impulse versus a correction. All right. Let's take a look at gold real quick. Personally, I'm still bearish on gold. The dollar is still pushing to the upside, and so I have a bearish outlook on gold. Now, I still want to see gold pull up a little bit more, up to 2028 right here, and then come down to 1998. I've been saying this all week, but I have to just keep reiterating the price. 1998, buy entry on gold. All right, we might have a little buy entry and then it crashes, but I'm buying at 1998, and that's where I'm looking to take the market. Now, will the market pull back up to 2028? I have no clue. If it does, that'll be a pretty good opportunity here to take a short position. Otherwise, just let it go and wait for that better entry. But I'm still bearish on gold. George said, I took the December NAS Masterclass and now I'm profitable. You are on the fence. Do it. You will thank yourself later, or you will thank me. All right. Anybody who took the masterclass, give an honest review here in the comments section, just so the people watching can have an effective feedback. And I want you guys to be as honest as you can. Be like, yeah, it was great, except for blank, blank, and blank, because we got to make sure that people are making an informed decision. So the only way that they can make an informed decision is not hearing it from me, but it's really hearing it from y'all. So if anybody has taken the class and you have some honest feedback, I'd really appreciate if you threw it in the YouTube, just so folks who are on the fence can make a decision for themselves, whether it's worth it or not. Live trading stream happening next week. Is going to be on Thursday, I believe, the day right after the Fed meeting. The Federal Reserve interest rate meeting is going to be on Wednesday. So Jerome Powell, interest rate decision drops, press conference at 2:30. We're going to be here live trading, of course, as usual, crushing it. So we will be here. All right, let's get back to NAS. Let's get back to the regularly scheduled programming. So close. So close. Damn. If we go 4-hour body to wick, that was an 88.6 rejection. But that don't make no sense. This makes sense. We didn't even hit the 78. Oh my God. Come on. George said the fundamentals Roy teaches alone is worth the class. Man, they know. You know. I appreciate the feedback, George. I've taken other classes and it's all strategy, which is fine, but Roy goes into fundamentals and how news also affects the markets and how the markets really work. That was key for me. Sir, I know it's simple, but my mentor never uses indicators or any of these tools. I just look at the price action and anatomy of candlesticks, and obviously wicks don't lie. Well, Zane, is that strategy working for you? If the answer is yes, perfect. Congratulations. If the answer is no, I'd recommend you taking a different approach. Listening to George in the chat here. Mike Pineda said, thanks to the masterclass, my entries are way more precise. I also see the market way better. Plus, with the guidance and coaching from Chart Addict's team, my confidence is through the roof. Mike, you've absolutely been crushing it. If you guys follow us on Instagram, I repost a lot of Mike's. He tags us almost every day with his entries. And I want to see more of you guys doing that. Now, obviously, if you want to succeed at trading, delete all social medias and never look back. But if you insist on being on social media, throw us a tag when you win. I ain't gonna kill you. But I appreciate the feedback, Mike, for real. Walter says, best investment of my trading journey, pay and put the time, be present, and don't be late to class. Yeah, Walter, don't be late to class. That's damn right. Best investment of my trading journey, be on, pay and put the time, be present, don't be late. Strategy works for everything. Thanks, Roy and the Chart Addicts team. Invest in yourself. Masterclass is definitely worth it for the low cost. Roy's a great teacher. I appreciate that, AMG. Thank you guys for the solid feedback. And of course, you guys can head over to the website and see it for yourself and check out more details to make your own decision to see if this is right for you. One problem with the strategy is lately, we've been too accurate, and being too accurate will have you missing the entry by 4 or 5 points. So, but one of the rules that you guys will learn in the master class is that it's better to miss a trade than to chase a trade, and that's that. Let's talk about the Fed meeting next week so I can give you my expectations before we hop off today. Jerome Powell is not expected to have any rate changes next week, or the FOMC is not expected to make any decisions about rate changes next week. So January, no rate change. So then what is it all about? It's all about sentiment now. Sentiment means, does the Fed sound like they intend on raising rates or cutting rates this year? That's what sentiment means. How do people feel about what Jerome Powell said? And do they believe him? So I think Jerome Powell is going to very clearly tell people the same shit that he's been telling them for the past 6 months. There's a possibility of rate cuts this year, but it's data dependent on inflation coming down. If inflation comes back up, Jerome Powell will not cut rates. If inflation, stays steady, then he will cut rates this year. I think Jerome Powell is going to upset everybody by letting them know not to expect 5, 6 rate cuts this year, which I think the market expectation, all the big firms. I wrote an article, kind of my breakdown for the year, and I cited Bank of America, I cited Goldman Sachs because I kind of went through them for some of my market research. A lot of my friends that are still over there, they sent me the market research, and let me just show you. All their expectations are on seven, or like six, seven rate hikes this year. It's too much. So market volatility and rate hikes. Let's see. Um, bum, bum, bum. So Goldman, Morgan Stanley, JP Morgan, and a few other folks, they're the ones they're really signaling for more rate cuts rather than less. I talked to Bob Elliott, chief economist, former Bridgewater and Associates chief economist, and he told me that he's actually expecting 3 or 4 rate cuts because the economy is stable. As long as the economy is stable, inflation can't come down. Do you guys understand what that means? Just as like a side thing, do you guys understand that when the economy is healthy, that's actually bad for inflation? All right, so if everybody has a job, if businesses are hiring and investing in R&D and operations, if local stores are seeing a ton of money from profits, if corporations are making more money, if suppliers are still charging more because people are buying it, how can prices come down? Prices don't come down unless people stop buying stuff. And people don't stop buying stuff unless they lose their jobs. So I actually don't see inflation coming down. And I'll show you like a quick example here, which is inflation was at 9% at its peak in the summer of 2022. And we've managed to get it down from 9% inflation, which is horrendous, to 3.2%, which is decent, but the Fed's target is right here at 2%. Now, just like losing weight, I've used this example before, losing the first 20 pounds is easy, losing the last 10 is damn near impossible. So getting to the 2% is going to take longer than what the Fed expects. This thing could take years to get down to 2%. Okay? So we can't break inflation unless the economy cracks. Like we need to see a dip down and flat. So will the Fed create an environment where people lose jobs just so they can get inflation under control? Well, Jerome Powell said that he would. He said he's going to raise rates or keep rates high until something breaks. So I believe that that's his strategy. January and March, no rate cuts, which will be unbelievably bearish for stocks as they panic. Then he'll say, I lied, some rate cuts. And then the markets will recover and we go back bullish. Okay? So right now, Jerome Powell, I believe, is going to take a more dovish or a more hawkish tone to start the year, which I think is going to be slightly bearish. And then he's going to correct himself once the economy lightens up and say that he's more hawkish. Or sorry, he's more dovish, excuse me. Damn. Cliffco said, okay, let me see. If you're nice to him, he will take his shirt off and flex. George, relax. None of that is happening. Said that's crazy for free. Oh yeah. Do you trust YouTube University and you versus formal education? Take the class and stop trying to do it yourself. I tried do it yourself and it doesn't work. Not all the things on YouTube are good though. You really just have, this is why I do live streams, because I'm not here trying to convince anybody to do anything. All I'm here to do is show it working in real time. And everybody here is an adult, except for this kid claiming he's 15. Everybody here is who is an adult, and you're capable of making your own decisions and your own judgment about whether this thing works, about whether my education style is something that you can learn from, and whether you believe in yourself enough to actually make this work. Okay, there are 3 steps here. Number 1, do you see it working with your own eyes? Okay, we do this daily. Number 2, do you believe that my style is good, like my education style and communication style is good for you? And then last but not least, of course, what is this? Did I order something? Hold on 1 second, guys. I don't even think I ordered anything, and Uber Eats is calling me. Give me a All right, good stuff. Okay. Yeah, so number one, you guys get to see it for yourself. Number two, you get to make your own judgment to see if the education style works for you. And then number three is self-confidence and self-belief. Okay, you see something, you see it works, you see it all good. Do you have the self-confidence to know that you can make this work for you? And a lot of people, I think they get stuck there. They're like, well, I get that it works, but I just don't think that I can make that work. It looks too hard. He's probably a lot better than I am, et cetera, et cetera. So you do have to have a self-belief that you can make this work. By the way, freaking 5 points missed the entry. That didn't miss it, but it's more so waiting for the perfect entry, not always the best. I wonder how many people were shorting today. It doesn't matter. Sucks to be them. Okay. Also, because the economy was resilient, 5 rate cuts is way too much. Exactly. It'll bring inflation right back. Good point, Ken. Or sorry, good point, Simone. Ken said, to be honest, Roy demystifies NAS100 and how to trade it properly. Beautiful. It definitely needs practice and patience, but believe me, when you get it, you have an asset that'll help you trade with confidence and you'll never look back. Yes. Appreciate the knowledge you dropped, Roy. It honestly helped me with my risk management and not wasting my ammo before news days and much more off these streams. Really appreciate what you do. Man, I love to hear that, especially that little course correction, which is most traders are losing their money trying to force news trades. And if we can just avoid that together, so much better. So much better. But damn, this one hurt. Cue the sad music. Everybody, somebody play the sad music, world's smallest violin. The teardrops coming down the window while we watch this trade leave the stage. Oh man. But I know my Chart Addicts members. I know a few of you guys probably entered this last night. Who's in this trade? Which one of y'all is in the buy? Oh, just says, I love charts and data. Good. You're in the right place. Walter said, I'm in it. Bro, I just watched it tap that 886 and I was like, I'll wait. LOL, just watch the markup play out. I mean, I didn't get in because I really was, especially last night, I really was waiting to see how the market reacted here. Because as soon as I saw this double top and I started to see this structure get broken, I started to see this structure form and then get broken, I was like, all right, we're headed to 350, but let me see how price reacts around the 350. Because if we break through in the morning, it's gone. So I really was trying to be patient with this. And to be honest, like I'm never mad at, I mean, no, there's probably been 3 times in the past couple months where I genuinely was upset that I missed the trade. I made a very, very clear choice with this one, saying that I felt like sellers were coming in. Again, discretion. I felt like my dumbass, right? Because the strategy says, is price holding above support? The answer is yes, take the trade. My intuition was telling me, oh, this could be it. This could be the drop. So the thing about listening to intuition is only ever do it when it's going to help you make better risk management decisions. Do I lose any money from missing this trade? No. So if I do use my intuition to stay out or to get in, I'm still doing it from a perspective of r- risk management responsibility and risk management priority. Okay. This is resistance at the top of the trend. I bought puts on this investment. Oof. It's gonna be a rough day, my friend. It's gonna be a rough day. Uh, do you have a stop loss on those puts or no? Do you even put stop loss on options or no? By the way, in case you guys don't know what puts are a derivative contract, part of the options category. And puts gives you the right to buy or the right to sell a stock at a predetermined price. So if you guys want to understand the very, very like 30-second explanation of options. So hold on. me get my. Oh my guys, I have to. I got this text message. I'm just responding to real quick. 3 p.m. 3 p.m. Oh, that's tough. Brian Dennis, I might have to reschedule our call for tomorrow. By the way. Okay, so real quick on options. There's two kinds of options: puts and calls. Calls is the right to buy a stock at a predetermined price. And puts is the right to sell a stock at a pre. Meaning, if I buy a put option on a specific stock, that means what I'm saying is I have the right to sell this stock at a price that we agree on. So let's say I buy put options at, let's just say $100 for the stock. Okay. Let's say the stock price dumps to $50. It just dumps to $50. I still have the right to sell my stock for $100 a piece. And so whoever I entered the contract with, they have the obligation to buy that stock from me for 100. Or with the calls, I have the right to buy a stock at a predetermined price. And so if I bought the call option for $50 and then the price is now 100, I get to go to this person or whoever the exchange is or the broker and say, I want my stock at $50. All right, you can take the stock at $50 and then make the profits. Whoever I entered the contract with has an obligation to sell me the stock at a predetermined price. So if you guys think about markets in terms of the layers, the first layer of markets is the underlying security or the real asset layer. Okay, this is the primary market. The primary market is, let's just say, the stock market where you actually own a stock certificate with voting rights. This is layer one. Okay, no leverage, no margin, just strictly spot trading the asset itself. Let's say gold or whatever it might be. Actually, let's go physical first. There's the physical gold. Then you go to, let's say, owning a derivative asset like an index that's not weighted or anything. There's an index, no margin. That's layer two. Layer three is you have derivatives. Derivatives are options, swaps, futures. They are all contracts whose price is derived from the underlying asset. So NASDAQ futures, as NASDAQ goes up, so do NASDAQ futures because they're a derivative of the underlying asset. Okay? And this is where options come in. So I'm not buying a Tesla stock or a gold bar. What I'm buying is an option to buy or sell gold at a predetermined price later in the future. It's a derivative contract. And then CFDs, which is where we live in CFD land, is right here. And then in between this, there's complex derivatives. If you guys have ever seen The Big Short, one of my favorite movies about Wall Street and about the '08 financial crisis, if you've seen The Big Short, they were explaining how credit default swaps and some of these insurance contracts are an extra layer to speculate on the main market. And then we have CFDs. CFDs are a contract for difference, which you're not even dealing with any of this stuff. Okay, it's just high margin. You enter a contract with your broker or with the liquidity provider directly that says if price goes from this to this, I make money. You pay me. It's a contract for difference in price or difference in rates for currencies. So these are the different layers of trading markets. There's the primary layer. There's the security layer. So securities are basically an asset that represents a secured interest in the real physical thing. Then you have derivatives, which are derivative contracts that are based on the price and performance of the underlying asset. You have more complicated derivatives, and then you have CFDs all the way out here. Make sense? Put a one in the chat if this is good information, if this is something that you knew or maybe you needed a refresher on, or if this is just new in general. For how many people put a one if this was brand new to you? Put a two if you kind of knew it and this was a good refresher, and put a three if you already knew this stuff and it wasn't helpful at all. So one, if this information was brand new to you. Two, if you kind of knew this stuff, but this was a good refresher. And three, if you already knew all of this and this was a waste of time. Ken already starting off the day in profits. Love to see it. You have a little bit of a late entry, my friend. Just be mindful of that. Okay. Little bit of a late entry. So I'm still hopeful that I get my entry. Now, I know that we've seen enough examples over the past 2-3 weeks where the market just doesn't come back and it keeps going as it's aggressive. I still think that we could see this at some point. It might not be till much, much later in the stream. That's why I have my stop loss already in profit. And when it comes back down, I'll enter again. Ken, love to see it. Two, good to know the layers. Awesome. Can you explain how lot sizes really work to clear out? Josh, what do you mean? Where can I find this information? On this stream, my dude. You just heard it. That's crazy. Also, if you guys are interested in specifically news trading or fundamentals trading, we also have an absolute banger. Hold on, where is it? Oh, trading news. So we have this banger course that goes through start to finish economics. So you understand the introduction to economics. There's 3-4 videos in each one. Central banks from start to finish, understanding what makes them tick and how they move. And this is not so high level that not everybody can learn it. Anybody can learn this info. And I'm sure that we've had a few folks that took this class, and you guys can give your honest feedback here. Is this for the average person or for the person who is just like very, very skilled with fundamentals already? Because I think that it's perfect for the average person. You can learn mastering economics, which is micro and macro, market mechanics, which is how markets move. Markets operate on a mechanical system where when you pull a lever somewhere, another lever gets pulled somewhere else, like something else moves. And so market mechanics, understanding like when you press this button, what comes out the other side, and knowing how that works is crucial for, kind of eliminating the guesswork out of fundamentals trading. Building a thesis, which is really how to understand where the market's going for the next 3 to 6 months. This is what you guys hear me do when I say, oh, I'm bearish on the yen for 3 years. Like, all right, Roy, where the fuck did you get that from? How did you just come up with that? There's a very clearly defined system of how I build a thesis for where the market's going to go. Because like I said, if I understand the market direction, I'm already ahead of 99.9% of traders. The people who are shorting at the bottom of the range and the people who are buying, completely different results today. So understanding the true definition, I think, is very crucial, and building a thesis is important. Then I actually have news trading, which is the model itself. The model itself and how I look to trade news events, especially the Fed meeting. And I'll show you guys live next Wednesday. You talked briefly about it. I still don't understand fully, but would like to look into it. Okay, so what about the example do you not understand? Because all I really said was there are different layers to the market. Here are the 4 layers. And depending on what you want to trade or how much exposure you want to have, here are your options. Now explain to me, GTA guy, what part of that was unclear, or what do you still want elaboration on? Because you can just ask a good question and go through it right now instead of asking like where to go find it. If you guys find a resource like me, because there really aren't many on YouTube, you find a resource of someone unbelievably competent and has context about a specific thing that you're interested in, and they're here engaging on YouTube, don't ask them, hey, where can I go online to find this stuff? Instead, take advantage of the opportunity and ask good questions now so you can literally get the answer because someone has put in 1,000 hours of time to doing a thing and can literally just save you that 1,000 hours. So that's what I would recommend from you. Now, if you really want to learn it, the fundamentals course is available, but I'm not here trying to push the course. I'm here trying to, you know, break this shit down. What affects the lot size as some contracts on leverage levels as to how some brokers, one standard is $100 per pip and some are only one. So yeah, Josh, you're gonna have so realistically speaking, the smallest lot size that you're supposed to be able to throw on a futures contract is a standard lot, but the CFD brokers allow you to trade the 0.01s because we have high leverage, high leverage. If you see a 0.01 lot size as the smallest lot size on an index, typically it's one of the offshore brokers, a little bit more sus. If you're forced to use higher lot sizes, typically you have lower margin, lower leverage. And so like you guys can see on the swing account on FTMO, I'm using like 10 lot, 30 lot trades. That is not a pure 10, 30 lots the same way it would be on like a Hugo's Way account. Completely different. So what I would do is anytime that you start a new challenger account, put the smallest possible lot size first. No matter what, put the smallest possible lot size and watch the market move. I've heard so many stories of, oh, bro, I put a one lot. I thought the one lot was supposed to be the same, bro. No, don't ever do that. You guys open an account. The first thing you do is just open the micro and just see the market go -$3 or 33 cents or $300, whatever it might be. You will have your answer. Do not leave it up to asking someone in a group chat, hey, which lot size should I use? They don't fucking know, and they don't have any responsibility over your family's future. So just put in the micro, figure it out, and then you'll have the answer every single time. Every time. Now, GTA guy, you're asking all these questions, brother. What specifically do you have trouble understanding with the different layers of the market? Just so we can have a good conversation. My boy just completely ignored my question and said I took the sell down. Nobody gives a fuck, man. I asked you a question. You can actually check how much money a lot size will give you on MT5. Yep, you can go to the quotes. I think it's either advanced quotes or it's about like the three dots at the top. And also, every brokerage's website has a list of the spreads that you can expect on each one. Also, the contract sizes for those different instruments. All right, y'all. With that, since the market's not going to come back to my entry, I have zero interest in just sitting here waiting or watching this thing leave the station without me. And the longer I stay here, this is just an honest, I'm a human, by the way, in case you guys fucking forgot. People just tend to forget that. I am a human. And so the longer I stay on here, the more likely I am to make a mistake in my account because I wanted an entry. I'm seeing it go in my direction. Thousands of dollars could have been made and they're not being made. And so walking away is the best course of action so that I don't overstay my welcome and make an emotional decision on the charts. So with that, I'll be walking away here in about 10 minutes, just a heads up. And some final reminders that the February Masterclass registration is almost over. Head over to chartaddictsfx.com, live classes, and then you'll have all the information you need to make an informed decision. As well as if you guys want to see the strategy working in real time, head over to the recording of all of our free YouTube streams, free every day, where I show the strategy, trades just like this one, trades just like this one, entries just like this wick, entries just like this candle. If you guys want to learn this strategy and see it working in real time, check out the live streams that we put up. Okay. No, I understand. Just thought that you were explaining something different. All good. I wasn't mean to be harsh. I didn't mean to be harsh, GTA, but like we were having a pretty solid convo about something pretty high level, and then I don't know. I just feel like this is a great place for people to ask questions, and I feel like people choose to just not do that. And I understand, guys. A lot of you guys are at work. A lot of shit is going on. It's early in the morning. We just want to make money and walk away. But at the same time, think about how much money people are paying for a formal education to learn this exact same shit. I have a finance degree, right? I have a Series 66 license. I have a Series 7 investment advisor license, broker dealer license, life, health, and annuity insurance license, the SIE license. I have a lot of these formal FINRA licenses, and it's a great time for you guys to ask good questions and just learn this shit for free. Even taking those exams and buying the courses is fucking expensive. I'll just throw that out there. Can 100% you can. Reach out to the request assistance tab. They'll give you the code, especially for you. And I have something even better, which is the VIP membership plan that we're going to roll out here in February. If you are a NAS100 student or coaching student active, if you guys got seats to either of those, then we're going to have something very special for you. On top of the free general admission ticket, you guys will have access to rejoin the group once your 1 month free trial ends, and you guys will be able to take advantage and have access to the master classes every month as part of the group. This also goes to the coaching folks and the lifetime folks as well. Love you too, Ken, my guy. All right, folks. Great work today, everybody. If you learned something, good for you. Drop a like on the stream on your way out. If not, we're going to take a better entry tomorrow. Hopefully get here just a little bit earlier. Oh my God. Look at the accuracy, by the way. 38.1. How generous of the market to stop right at that zone. Anyone who took US 30 yesterday, you're winning. And anyone who took it today, you're winning. He says tomorrow is Saturday. Yeah, we're going to do... You said tomorrow is Saturday. What did I just say? We're going to be on the live stream tomorrow? Yeah, you're right. You're right. Tomorrow we'll do education. But that's going to be for members only. Saturday education is now for members only, by the way. So tomorrow we'll be covering the full strategy again in full detail, and we'll talk about the different trades that we took this week on tomorrow's education session. This was an absolute banger. Wow, what happened with the dollar? Nothing. What happened with gold? Oh, there's that gold sell. 1998, baby. Also a re-entry zone right here. Let me make sure I got this level right. Body wick. 1230. All right, anywhere in this 1230 or 2030, 2032 area, great potential double bottom, retest, and short. So this would be a great selling area. This would be a great buying area. So sells at 2032, buys at 1998. Mark those levels off if you're a gold trader. Even if you don't take this trade, just mark those levels off and watch the reactions. Okay, thank me later. Ladies and gents, take it easy. Peace. All right, CA members, tomorrow, education session. Bring your questions, bring your charts.